What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. And I would like to announce that we are going to new all-time highs in the market. Now, I have no idea. The market is certainly moving very quickly today. We're going to talk about the price action in the indices. We're going to go through my one trade that I placed for today. Before we do that, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters, and don't be doing any YOLOing into your trades or my trades or anyone's trades. All right, let's take a look at these box scores, and it is like Groundhog Day. Almost every single day there's 1% gain in the markets. So we had the S&P 500 up 1.24%. We had our Nasdaq up 1.72%. Small caps took the lead today, up 2.68% today. Dow Jones, dogs of the Dow, lagging behind everything else, only up 1%. And we had our ARK Innovation ETF. This was actually the leader today, up 6.46%. Everything closed towards the upper end of the range today. So you can see, about 85%, 89% on that range. Volatility got crushed yet again. Another Groundhog Day event, vol crush. And then we had the market breadth, which was very positive for today. Oh my gosh. Finviz heat map. Look at this. So a ton of green across the screen today, and we can see real estate as well as some of these more reopening type names like the restaurants, the travel names did pretty well. And then these names like Apple and Tesla, the hot streak continues. I believe Apple and Tesla are on like their 11th consecutive green days. And it's pretty crazy whenever they put in this huge streak, just like literally 2 weeks ago. I know 2 weeks ago feels like a lifetime ago. Literally 2 weeks ago, it's like, oh my gosh, we're on this horrible streak. The market will never go higher. Now it's kind of the opposite feeling where it's like, man, nothing could stop this market. At this point, what can? So we'll take a look. Let's dive a little bit deeper into the price action. Let's look at the indices. And then we'll jump over to our sectors and style factors. My trend model is still at a +3. And let's take a look here. So for the majority of this rally, I was saying, hey, we could get up to 45.63. Wouldn't that be insane? Wouldn't that be crazy if that happened? And look at this. Today, we just blew right past it. And we got a firm breakout out of this monthly value area. The market had a pretty significant gap. Let's go over to SPY to see that. Sometimes I like looking at the futures, but you can't really see little nuances like that. Like, take a look. This was the SPY gap higher. And we did have a pullback intraday, but the market really stuck the landing. And towards the end of the day, we just broke off to new heights for this leg of the rally. Take a look at this hourly chart and you'll see what I mean here. Let's pull this up. So we're already at our R1 pivot for the week. And this is just an extension level away from this weekly value area. So basically what this is saying is, hey, this is where the majority of transactions last week occurred. We're very extended beyond that, but that did not even deter the buyers, and it didn't even bring in sellers. Like, everyone's holding, we're just continuing to move to the upside. So yeah, very powerful rally. And overall, when you look at this daily chart, we're pretty much moving up in like a parabola, where here you can see there's like a 45-degree slope, and now over these past 3 or 4 days, the slope is, we're pretty much going straight up. We're taking the elevator up. Let's take a look at our Nasdaq real quick. So these are our ES futures. And you can see the ES futures, they're trading down ever so slightly in the after hours because it is past 6 p.m. So we can see that action. Let's take a look at our Nasdaq. Nasdaq also put in a good day. You can see we're trading above this 200-day simple moving average now. And we have a virgin point of control ahead of us at 15,594. So pretty crazy stuff there. Could we hit that VPOC? Absolutely. That's definitely a level to look for. And then our Russell 2000, we had about 6 or 7 days of consolidation, and now we finally got that break higher in the small caps. Keep in mind, pretty much all of these indices, this is also Groundhog Day, but we're getting extended from the 5-day EMA. So at some point there will be a pullback. Of course, right now it feels like it's never going to happen. Usually it happens pretty soon after you get that feeling. Let's take a look. Dow Jones is down just a smidge in the after hours, but this one as well, we're trading above that monthly point of control. The Dow Jones is still in no man's land. But look at this. We have our new developing monthly value area for April, and you can see it's well above that one. Let's pull up the VIX. VIX got demolished yet again, and we're trading below a 19 handle. So we are at 18.9 for the VIX. And let's pull up our weekly chart here. So you can see there's periodic vol spikes in the market, and this has been happening, since the beginning of time. But I tend to look at, from 2020 onward, because once the coronavirus happened, we pretty much entered this new regime of like this crazy monetary stimulus, etc. And you can see the VIX has definitely come off in the last 4 weeks. We do have, all the way down to 16.5, pretty much 16.3. Could the VIX get down there? Yeah, it certainly could. It definitely could. So there is some room to the downside. But that being said, if you're looking at the symmetry here, I actually added some exposure to volatility because I do think the upside is a lot higher than the downside. Because I think a lot of good outcomes are certainly being priced in. I think some good outcomes in Russia and Ukraine. You can see crude oil. It's actually trading up in the after hours, but crude oil dipped yet again, but it did put in a green candle. So yeah, I think some of these inflationary pressures perhaps are coming off the market. Market's pricing in a nice peace agreement. Market might be starting to price in that inflation has peaked. And maybe with that, the market is pricing in that the Fed hawkishness has also peaked. Let's take a look at our sectors and style factors today. And we'll look at the composition of the rally. There's some changes going on here, a changing of the guard. We have the blockchain ETF. This is in our top momentum slot because cryptos are performing very well as of late. They're leading the market higher. We have this ARKW Next Gen Internet ETF, which is up 5.44%. Another ARK ETF, which is also in this top momentum slot. So we are seeing growth stocks beginning to outperform value, and just overall, overwhelmingly positive day. You can see biotech was up 4.28%. To be honest, today really looked like a capitulation day where, we closed out pretty much right on the highs, and it really just seems like at this point it's FOMO of like, gotta get in the market. We'll see how that works out for everyone that's chasing the market at these overextended levels. Today, the high beta style factor took the lead. It was up 2.51%. International momentum was up 2.12%. And you can see that this quality ETF was up 1.82%. Quarter end rebalancing. We are pretty much at quarter end, and this is absolutely remarkable. I've been talking about this for the past 2 weeks. Hey, a lot of times there's like a window dressing effect that happens into quarter end. At this point, though, this massive rebalance is pretty much behind us, I would say. There's 2 more days in the quarter. And yeah, how are we going to leave off this quarter? The SPY is now only down a few percent year to date. It was down, well over 10% at one point. So yeah, a lot of those market wrongs have been erased. But what's interesting is like the overall backdrop that everyone was so concerned about just a few weeks ago, that backdrop still seems by and large to be present. But then again, the price action is really what we should be going off of, because a lot of times the price action will lead the economic fundamentals. A lot of times the price action leads the narratives, etc., etc. Today, take a look at our top leaders for options flow. We had about 2.4 billion worth of Tesla options after putting in well over 4 billion yesterday. And let's take a quick look at our tradescape here. So you can see Tesla calls being bid up. What do we have here for SPY? SPY, still a lot of puts going up. It's interesting. Yeah, puts for September. Huh. It's kind of odd. I wouldn't really expect that. For the Qs, more of a mixed bag. In Apple, you can see there's a ton of call buyers. Take a look at this Apple chart. And I'll go to my one trade of the day. Apple up 1.91%. Apple is literally just gone vertical. So, I mean, when these vertical moves happen, like, is the risk reward of getting long here good? No, it's certainly not. It hasn't been for the past few days, and that hasn't stopped Apple. But pretty much everything is trading up at that upper Bollinger Band right now. So who knows when we're going to get that pullback to these key moving averages, but it happens like clockwork in the market. My one trade for today, let's check it out. I got long these UVXY common shares for $12.55. So this is a proxy for being long volatility. Don't want to chase the market at these levels. Would rather set a trap for poor location longs. Because yeah, I think for the most part in the market, unless something pivotal has just happened, maybe it's like, okay, now we know the Fed's not going to be as hawkish. Like this is all resolved. Hey, if all the reasons for this selling are now suddenly gone, like all the worries everyone had are now at ease, and we know the QE program, which just ended, is actually going to come back. We know these moves in the yield curve, they're actually just going to be priced right out again. If that's the case, then yeah, I guess 480 SPY is justified. If we're just going to immediately go back to the way things just were. But if that's not the case, which I don't think is the case, then I think people are going to look back and be like, oh my gosh, why did I chase the market up here after we had like 10 green days in a row? And I think that's more likely the case. So yeah, I just took that one trade. And other than that, I'm sitting at about 80% cash right now. I'm pretty much just waiting for either some sort of consolidation, a pullback, or whatever. Because the worst thing that you can do is, the market's pretty much like your dance partner. You want to be in sync with the market. If you find yourself not in sync and you're playing catch up, what a lot of people will do is they'll be like, man, I haven't been long. We're 12 days into this rally. All right, I got to allocate everything in. Like, got to just jump in here. And that's where you end up being the sucker. Because you're sort of like the last one to the party. Look at this 20-day moving average. It's all the way down here at like 435 on the SPY. So, yeah, we'll have to see. This is going to be a really interesting couple days. I'm super excited just because this is pretty wild price action. And I think so far this entire year to date has been pretty spectacular price action in terms of the upside and the downside. So again, tomorrow we're only 2 days away from quarter end. I think once we get to quarter end and we can kind of close that chapter, then a new one will open for Q2. With that being said, that about does it for this market recap video. Hope you all had a good trading session, and I will see you all tomorrow.